Well, yesterday's Statistics South Africa, Stats SA, announced that the economy had contracted by 0.7% in the second quarter, which confirmed that the country entered a technical recession. Economists say that this can largely be ascribed to historical revisions that stretch back to about 2017 and that about 10 sectors dragged the economy. But another report that came out yesterday was the Transunion Consumer Credit Index. The CCI index fell by 4 points in quarter two, this due to rising default rates. To get a clearer understanding of what this means, we're joined by Mr. Priven Moodley. He's a director at Transunion. Mr. Moodley, welcome to the agenda. Thank you so much for making the time. What does it mean when we say it's gone down by 4%?
So it's reduced by 4%, still within a positive credit consumer health index. So what we've seen in the market recently is that, aggregated from a consumer credit perspective, is that there's rising defaults over the last quarter. So this has indicated that there's stress in the economy from consumers not being able to meet credit obligations. It's the first time that this has increased in the last 2 years. And we expect this to potentially tear out towards the end of the year.
It's interesting that it's increased at the same time that a recession has been announced. Have we been able to make a connection between the announcement of the recession and these trends?
Yeah, so the index runs as kind of a diffusion index. So any rating above 50 is positive consumer credit health. Anything below 50 is negative consumer credit health. The last time, interestingly, that we were in a full-blown recession, we saw the worst ratings in the index, all the way down to 40. And this is the first signs of the index moving towards the neutral break-even point of 50.
Does it mean that there hasn't been an effect by factors such as the increase in VAT, the fuel increases, the multiple increases, and also the increase in general services and other costs? So
one of the factors that we track as part of the index is household cash flow. Household cash flow is a component of income growth, primarily within a household, and the effect that liquidity that a household holds, plus inflation on non-discretionary items such as basic necessities has. So we've seen this deceleration of household cash flow over the last quarter to 0.4%. The first quarter we had 1.8%. What that's generally meaning is that the buying power of households has generally only increased by 0.4% over the last year, which is a drastic impact considering the rising costs and the rising price of fuel and VAT.
So all in all, how is this report saying that the South African consumer is interacting with debt?
So it's showing limited stagnation in terms of consumer credit. Distressed borrowing is not showing signs of severe deterioration. So distressed borrowing is the way consumers buy into their limits on credit cards and store cards. We're not seeing significant deterioration in that metric. What we are seeing, though, is the first increase of defaults for over the last 2 years. So generally speaking, there is a stagnation of credit within the economy, and consumers, given the real income growth that households are experiencing, are facing headwinds moving into the last half of the year.
Let's speak to the announcement of the recession.
Yeah.
How does it interact with this report?
So interestingly, what we generally want to see is probably the SAB's reaction to this, right? So the SAB needs to come out and take a stance around how they manage the repo rate. So if the SAB comes out and in reaction to the way the rand is moving and inflation is actually moving up, if the repo rate increases do actually materialize towards the end of this year or beginning of next year, what you're going to see is an increase in debt servicing costs. So increase in debt servicing costs means bad news for consumers. So with real income growth actually only going 0.4%, there's limited room for consumers to deleverage themselves and pay off obligations in the market. So the first reaction that we'd want to see in the market is how the SAB reacts from a consumer credit perspective.
Who are the users of this report?
So generally, it's a good sentiment into the market for consumers to ascertain where consumer credit is moving, where appetite from lenders and so forth are coming. But general users of the report is lenders themselves to know what headwinds they are potentially facing. One of the applications of it is that we use the report as a good indicator or leading indicator into retail sales.
Yeah.
So on a 15-month basis, the report does lead retail sales. And if this is the first deterioration, you should see some stagnation over the coming year on retail sales.
Does it speak in any way to legislation and the protection of consumers?
So protection of consumers, yes. What needs to happen is that both lenders and consumers need to be prudent in the way they approach the market. South Africa is a very well-regulated economy in regards to consumer lending, and I think that process will actually protect consumers in a way in avoiding reckless lending into the market. But at the same time, consumers need to be prudent and honest about their financial situation when approaching the credit market.
So if you are watching us now and thinking, I'm way in debt and I need some sort of relief, what can they take away from this report?
So the important thing is that the South African credit market has 25 million credit active consumers. 10 million of those consumers have at least one account in default or arrears. But the interesting fact is that not many consumers actually access their free credit report that is allowed to them on an annual basis. Less than 1 million people on an annual basis actually go out and access that free credit report and understand what's sitting in their credit profile to make a firm decision about their financial position. So point number one, gain access to your free credit report. It's free from most bureaus. It's available through a toll-free line from TransUnion. Or
do you have some detail you can give us? Okay.
0861 482 482, or visit if you have access.
086?
0861
yeah
482 482, or mytransunion.com.
So where people can get information about their credit records.
Yes.
Priven Moodley, thank you so much for making the time to come through. Priven is a director at TransUnion, and we're talking about the latest credit consumer index that came out yesterday.